Hey traders, John Hall here, and I have an incredible sort of training and education for you today. This is going to be broken up into three different parts. The first part is going to be me walking through some articles and some news announcements that's come out over the last 24 hours. I'm going to share with you my thoughts on that, such as no problem, bizarre new world consumer debt. We're going to be talking about how the big squeeze in 2 months sending short stocks to critical resistance. We're talking about that. Also, we're talking about the Nasdaq valuations and what's really going on with the Nasdaq valuations, plus the fear and greed index, what it means. Also, we're talking about the struggling economy gets only limited support, what that actually means behind the scenes, and what this actually means for 2021. And also the better than expected jobs report. Was it really better than expected? And is it all rosy? So that's the first part I'm going to be covering. The second part I'm going to be covering is I'm going to be playing a video that I did just recently. And it's more of a mindset video, what I'm doing right now, just to really help you guys when it comes to, helping you get out of your comfort zone and helping you move forward in a big way. And then the last segment, we're going to come back to the charts, and then I'm going to spend some time going over the charts and helping you guys simplify the markets in understanding the trend analysis, where I draw trend lines, how to identify the trends, and all that sort of stuff. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's training. I'm really excited for this. So the first article here that I want to go over is coming in from Zero Hedge. No payment, no problem, bizarre new world order. So you can see firstly is this is cooking the books. What I'm about to share with you is cooking the books massively. So you can see if I bring up this this screenshot here for a minute. Let me bring up this screenshot here for a minute. And you can see here student loan delinquents plunged. 90-day plus delinquency percentage of loans. It plunged. Oh, look at this. So there's a lot of delinquencies, and then something, oh look, I plunged down to, back down to here. Oh my goodness, it looks amazing, doesn't it? Let's actually see what the article says from here. Student loan, where are we here? Here we go. Let's actually remove these. Student loan borrowers were automatically rolled into forbearance under the CARES Act. And even though many students have stopped making payments, delinquency rates plunged because the Department of Education has decided to report as current. If that's not cooking the books, I don't know what is. So there is still a lot of delinquency rates in the student loans, but hang on a minute, they're going to start to just, oh, you know what? Even though there's so many more payments late, let's just make the numbers all even. No, that's not. All these loans that were in a forbearance, even if they were delinquent, yep, according to the New York Fed data, the delinquency rate of student loan borrowers thought many have stopped making payments, plunged from 10.2% down to 6.2%, the lowest since 2007. What a lot of hogwash. It's just absolutely crazy, guys. So, and oh, by the way, guys, if you haven't got my free trading course, make sure you click on that link in the description below and go grab my free trading course, breakthrough course. I think it's like 7-8 videos, mindset, chart reading, trading systems, and so much more. So make sure you go do that. Also moving on now through to, and as you can see, percentage of household loan balance. That's actually percentage of household balance being deemed current. Once again, they're cooking the books. What does it say here? Still, and because delinquency rates in student loans and auto loans, credit card debts, and mortgages are being cured, and because the delinquency rates in student loans, auto loans, credit card debt, and mortgage loans are being cured, by putting all loans in deferral programs, they haven't been cured, they're just deferral programs, and modifying the delinquency loans, they become current loans, even though no catch-up payments have been made. Oh my goodness. This is cooking the books. Still about 32 million people are claiming unemployment insurance. As much as small employment shock during the financial crisis caused the percentage of delinquency rates loans to soar, and the percentage of current loan balances to plunge to bottom of 88% in 2009. Not this time. As the percentage of delinquency rates loans fell below the percentage of the current loan balance, jumped to 96% as record highs in New York Fed is going back to 1993. And you can see what's happening here. And it's just, it's cooking the books, right? Same thing for here for the auto loans. Just here, look, across all lenders, about 5.9%, which is 1.3 trillion of auto loans, so close to 80 billion are in forbearance according to New York Fed. And as a result, borrowers who cannot make payments don't have to make it. Oh, that's okay. They don't have to make it. And their loans still deemed current. Cooking the books. Oh my goodness, this is just crazy. Oh, look, look at all the numbers. We're getting a V-shaped recovery. You watch Trump. Trump's going to come out soon and go, V-shaped recovery. Here we go, V-shaped. Look at all the numbers. Better than expected. Oh my goodness, all numbers current. What a load of crock of shite. Tell you what, guys, 2021 is not going to be good when they actually have to start to pay these back. Oh my goodness. And the percentage of auto loans and the new delinquencies dropped to 6.9%, a record low in the data, while during the last crisis, the delinquency rates were above 10%. So you can see here in 08, 09, above there, you can see what happened here. Oh, look, no, there's no delinquency, all current, all current, Same for 30 to 60 day late mortgages. And the mortgages that have been, let's actually start here. Yeah, Wells Fargo reported 44 billion of consumer loans in deferral at the end of quarter 2. This includes 35 billion in mortgages. In total, 12% of the first mortgages and 10% of the second mortgages were in deferral. Nearly 9% of JP Morgan's home mortgages were in deferral, according to the Mortgage Bank Association. 7.8% of all home mortgages in current forbearance. According to the New York Fed, 730 billion in mortgages are in forbearance. And the payment that has been deferred amount is around 6 billion a month. A significant transfer to homeowners that have been used to increase consumption elsewhere or to pay down other debts. And the mortgages that have been 30 to 60 days delinquencies were cured. Oh, that's okay. They're about 60 days behind, but that's okay. They're current, right? They're current. Everything's good to go, at a record pace. They were brought to current, not because the borrowers made catch-up payments, but because these mortgages were modified and rolled into forbearance, and thus were once again deemed current, cured at a record 61% of the 30 to 60. A record 61% of the 30 to 60 day late mortgages were thus cured. Just look at that here, right? And the same thing for consumers. As these troubled auto loans, credit card loans, and other consumer loans are being moved into the deferral program and modified into delinquencies cured without making a payment being made, the percentage of consumers with third-party collections when a bank throws in the towel and sells the delinquency loans for cents in the dollar to a collections agency has dropped. Oh, and you surely guessed it, to a record low. This is really, 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 really bad. And this is this one right here. This is what I want to hear. This is utterly bizarre. A new world of non-payment, no problem credit, where debt payments are being put on ice and where the delinquencies are in routinely cured by modifying loans and then be sheltering the loans from forbearance programs. The missed interest payments are added to the principal balance of the loan. And so look at this here. Sheltered by the programs. The missed interest payments are being added to the principal balance of the loan. So it's not like, they really have been. It's like they've just been added to the loan. So whether that's been added to the end of the loan or when they have to start paying it, maybe in 2021, the payment's going to be even higher. Now, this is where it gets really, really bad. And the burdens of those debt grows even as the banks book the interest income of those payments. And it's not like the consumers. This is where it gets really bad. It's not like consumers are putting this money not spent on the debt payments into savings to use for requirement future debt payments. They're spending it and it's gone. In this way, they're using the mortgages and other loans as an ATM spending money. This spending of debt payments not made has been a powerful part of the huge stimulus in the economy as people shopped online instead of making car payments or mortgage payments. But all these programs are scheduled to end, and then what? This is the question surely will come up with the magic trick. This is really, really, really bad, guys. I'm telling you right now, cooking the books. This is really bad, cooking the books. And so it's just absolutely crazy what we're seeing through here, guys. Let's actually move on to the next article here. One thing we can see here is the biggest squeeze in 2 months sends most shorted stocks to critical resistance. Basically what we can see here, let me actually just bring this chart up. So we can see right now that the red line, most shorted leveraged here. We've got the red line, and obviously the green line is the Nasdaq. So you can see that over time, with the most shorted sort of leveraged stocks get to this point, they're getting towards the brink here. As you can see by looking at this, let me actually see if I can I open this chart up a bit more? No, I can't. And a handful of mega stocks in the S&P now account for 22% of the market cap, has been now responsible for the latest melt up in the equity index. And we know that, right? It's only 22%. You can see the at the top here, which was in the 2000s, Microsoft, GE, Intel, Walmart. Right now we have the percentages of the melt up have been Microsoft, Apple, Amazon, Alphabet, tech stocks, and we know that the market is in a massive bubble right now. The problem with looking at a bubble, and as you can see with this other article here, Nasdaq valuations say you'll be stuck at home for a long time. If you have a look at, say, this image here, you can see that rich valuations. Nasdaq records setting rally pushes price earnings ratio to 16-year high. The problem I was saying before, the problem with the bubble is that you just never know when the bubble's going to end. And so there's been, over the last even few weeks, there's been a lot of articles out there saying the bubble's going to end, it's going to bust, and it will bust. And even I've been saying that. We've been saying that. So you can see the top up here is the Nasdaq, and then the bottom here is the price to earnings ratio, and we're getting way back up here to where we were back in 2005, so a 16-year high. Does that mean it's going to end now? No. With what the government's doing, they're just going to keep buying it, and we just don't know when this is going to end. So yes, we are going to see a reversal soon, but it's probably not going to be happening yet. It's probably not going to be happening right now. We're seeing a lot of Nasdaq bubbles. And if I go to my fear and greed index, you can see right now we're just into that greed. We're not into the extreme greed yet. We would need to see this indicator here. If you just type in money.cn.com or just type in fear and greed index into Google, and then this will come up. What we would want to see is if we're getting too high in the bubble, is we start to get to the extreme greed. So if I scroll down to the bottom here, you can see that in this fear and greed over time, this point down the bottom right here was when the virus happened, and most people extreme fear. This is where the extreme fear is happening, and this is the extreme greed. I would think in the current situation we're in right now with the Nasdaq and the stock market and so on and so forth, I would expect to see S&P 500 make a new high, and the Nasdaq and the other indices to continue up, and then this will actually start to push this indicator back into the above sort of 80 level, and then that'll get us into the extreme greed phase as this bubble continues to expand. And then we're probably likely to start to see, as you can see, every time we get up to this really, especially if we start to see the indicator get up to 100, very limited times we actually get up to here before we start to see a sharp snapback. This is the stock market going up as people are getting greedy, and it's just saying, hey, this is getting too greedy right now. We need to come back, and you can see what actually happens within that. And when we get to that sort of 100 level, we can see we actually have a sharp snapback. So once again, that this article right here is when people are getting extreme fear, which means it's probably a good buying opportunity for some markets. And when we start to get up to the top up here, which is above 80, we know we're getting ready for some sort of a sharp turning point. We don't know exactly when that's going to be. You can see sometimes it has like a bit of a double rip, but we can see we're getting to that point now. It's like, oh, I'm not too quite sure. So that's what I'm seeing through there. Moving on now through to the next article that I want to share with you is the struggling economy gets only limited help from Trump. Look at this here. The executive action signed by President Trump on Saturday added up to a thinning lifeline of support for an already stalling economic recovery, maybe force lawmakers in. Trump, let's actually move this into here. This is on Bloomberg. Trump redirected a disaster relief fund that would provide $300 a week in federal aid to an unemployment plus $100 in state funds. So basically around $400. Down from the $600 a week. You guys that have been smoking weed every day and been buying all these games and putting all your money that you haven't been spending on your debt into weed and games and also Robin Hood, you're going to have less money right now. What's that going to mean? People are going to be pissed, right? It's like, are you serious? I'm not getting paid less money to sit on my ass? I can't believe this government. What's going on? Right? They're going to be absolutely pissed. $600 a week in the CARES Act actually expired in July. That money is capped at the $44 billion, which at the current levels of unemployment could run out in 1 or 2 months. So this is actually really, really, really crazy. One thing I want to share with you is, let's actually go back to this next article down here, tax referral payments. This is like tax referral payments. What? Like, what's going to happen here? It's like, hang on a minute. If you have a look at the government, okay, so let's actually draw this here. You have a look, let's actually draw this very big sort of line down the bottom here, right? So we have the government here, government income, and government expenses. The government right now is the income. The income is dropped. We have seen a let's actually this here. We have seen the income just do this. Okay, so the income, people are not working, less income. Deferral payments, less income, etc., etc. And what have we seen for the expenses? We've seen the expenses do this. Wham, big up move. So hang on a minute. Less income, deferral programs, more deficit on the budget, more expenses on the budget. This is not going to end well. It really is not. And this moving here through to the last article that I want to share with you is that the better than expected US job data seen as the last as easy gains. Payroll rise of 1.7 million reflected in continued earnings reopening. So we're starting to see reopenings in America and so on and so forth. But you know what? Let me just bring where was that chart here? Let me just bring this chart up to here. You know what? Slowly closing the gap. You know, we had back here in 2009, we were absolutely hammered, right? Absolutely hammered. And then we had a nice steady rise, 2013, 14, 16, 19, 17, 20, and then fell off the cliff. And now we've rallied back up. With everything that I've just said here right now, what's the chances of more bankruptcies happening? What's the chances of credit card defaults going up? 2021, right? So they're probably going to defer all the payments for the rest of this year. 2021 is going to be a very, very, very bad year. So I wouldn't be too surprised to actually see this thing go back down to here again. And it's like, because once they actually start to pay it, guess what? No one has savings, or some people have savings, but most people don't have savings because they're spending the money. And when they actually have to start to pay back their loans, as they said, they've actually put it on top of the loan. So does that mean they have to now start to pay back more money than they were? A lot of these people are not going to have jobs. A lot of these people that are the referred payment are just going to. This is 2021, guys. 2021, guys, is going to be really, really, really bad. Because by the time the government starts to stop slowing down again, once they have to start to pay back their money they have been saving, it's just going to be really, really, really bad. So let me know what you think in the chat box below about everything I've said here. That's why 2021 is probably going to be a disastrous year for a lot of people. And we're going to see defaults, bankruptcies, foreclosures. We think what's happening right now over this year has been bad. This is just a little blip on the screen. Because, you know, they're cooking the books. They're cooking the books, guys. I can't believe it, right? It's like, look at the numbers. They're amazing. No, they're not. They cooked the books. They're cooking them, right? They're not cooking them. They're frying the crap out of this thing, you know? It's like you're cooking eggs on the fry pan. You didn't just cook the eggs, you fried the crap out of it. So let me know what you think in the chat box below. What I'm going to play right now, guys, is just a quick 2 or 3 minute video. It's actually me on camera, and it's just going to be walking through some motivational stuff, some mindset stuff, some things that I'm doing in my life to help me push myself out of my comfort zone. And then I'm going to come back on to then walk you through a good chart segment. We're going to go through some different charts, maybe look at Tesla, Amazon, Facebook, and just start to apply some really good technical analysis, teach you about trend analysis, drawing trend lines and that sort of stuff. And it's going to be quite amazing. So I'm looking forward. So watch this short 2 or 3 minute video, and hopefully this really inspires you and helps you as well too. And then we're going to get into a chart segment. So just coming out of the F45 session, as you can see, getting lean. One thing I'm trying to do every single week now is I'm trying to change my routine up. I'm trying to change things up, and I'm trying to, not get too comfortable in my life. I find sometimes in my life itself, again, it's like, I don't know what time it is, about 7:30 or something like that right now, in the morning. I find that sometimes I get too comfortable. By the way, this here, Powerade Zero, I felt like I was going to throw up in that session. I tell you what, it was so intense. It was like 40 seconds on, 20-second break, and that was for 4 rounds. And then we did 1 round of 40 seconds on, 20-second break, and then the last round was 60 seconds full on, 30-second break, but different workouts. So 60 seconds on, 30-second break. Next workout, 60 seconds on, 30-second break, and that's 45 minutes of that session. So anyway, and one thing I'm trying to do in my life is I'm trying to push myself out of my comfort zone. I didn't really want to come this morning. I was actually nervous, by the way, but I'm trying to do some things to really push me out of comfort zone, not just doing the normal jogging and gym workout and so on and so forth. So anyway, I'm really trying hard with that, things that I know that I need to do to start to shake this thing up, try to get myself out of my comfort zone, because I think sometimes I try to want to get too comfortable in my life, and I find by me doing things like this, by pushing myself out of my comfort zone, it starts to get me to push my other areas in my life where I know I could be doing more, such as business and in my trading and investing, parenting, health and fitness, and so on and so forth. So try to get yourself out of your comfort zone, because I think sometimes when we get too comfortable, we're making no progress. We're not actually happy in our life. But by getting ourselves out of our comfort zone and doing things like I'm doing this morning, where I really felt like I was going to throw up, it's something that I know I need to keep doing. I did it last week. I did midday. I did Monday through to Friday. I did a weight session, and then at night and weight session. Then at night I'll do the F45. This week I'm changing it up. So first thing in the morning, F45, get some food in me, and then this afternoon I'll get a weight session in as well too. Pushing myself to my boundaries and pushing myself to my limits, because I know in my life I'm truly capable of so much more in my life. I just need to push my limits even more, and this is the way to do it. As I said before, when I'm in my comfort zone too much, I'm not making any progress. I'm not pushing. I'm not actually happy. But when I'm pushing myself out of my comfort zone, I start to become a lot happier. So anyway, guys, this is the Monday morning coming to you guys. I hope this is an encouragement. Maybe some things you should do. Some things that I know I should do even more is actually read books. I'm so proud of myself. This is the very first year I actually read a book front to back, and that was the Shoe Dog book. Sometimes I'll start and stop books. So the next book I want to read front to back, I've actually already started reading, is Catching the Wolf of Wall Street. That was the second book that he wrote. So anyway, guys, hopefully this has encouraged you guys to try to do some things as well too. This is my whole week workout routine now, by the way. First thing in the morning, I get up, I go for a walk, do some stretching, cold shower, lemon water, do my trading, and then do some coaching, and then I'm heat of wave 45, and then throughout in the afternoon I'll get a weight session as well too. I'm doing this Monday through to Friday this week as well too. That's my commitment, and that's what I must do. Alrighty, traders, so let's actually get straight into the chart segment. And now what I'm going to do in this segment here is, instead of giving you a market update, I want to just teach you some really simple things you can start to apply to the way that you're reading these markets, the way that you can see these markets, how I apply my analysis when it comes to trend analysis and drawing my trend lines and all that sort of stuff. And hopefully you guys can learn some things that I do within my own trading that's really helped me within my trading. So I'm just gonna go through some stocks, maybe some of the Amazon and Netflix and Facebook. I'm just gonna apply my analysis to that, like I would when I'm doing my analysis, and hopefully you guys can gain some things that really help you simplify the market. Now, the first thing I do say is that what you want to do is you want to make sure your chart is looking something like this, where you can see where there's really nothing on the screen. I find a lot of traders, they have these horizontal lines coming all through here as well. All these horizontal lines, they have like, you can see it says Apple up here, so it will say Apple right here as well. They have a lot of things here. And then you'll find you have a lot of different indicators. So you might have the RSI down here, and then you might have the stochastics, and then the MACD, and all these sort of things. Then you might have your Bollinger Bands going through here, and then your moving averages going through here, and all that sort of things. As you can see, there's a lot of things on the charts. The most important thing to us as a trader is the actual price action, the chart itself. The indicators is not going to give us good entries. The chart is going to give us good entry. The power is in the chart itself. Not what we think, not what we hope, and not even the indicator. Because sometimes when you're looking at the RSI or the stochastics, you could get the stochastic coming over here to oversold, and then suddenly all the market does this, the market comes back down, and then suddenly the market goes for a big run again. So I have found personally is that when I'm trying to just analyze the charts and see what's really going on, I need to, one, remove everything off the screen. And as you can see through here, so whether you like candlesticks or just the open highlight close charts, it doesn't matter. What we're trying to look for when we're trying to analyze the charts is we're trying to just see what the market's doing. So that's why I have black bars, because I don't really care about this one individual bar. Now I do when I'm looking for an entry, but if I'm trying to gauge, okay, what's been going on for the last, say, 3 or 6 months? Where's the trend analysis? How would I apply my trend lines and all that sort of stuff? So firstly, bring it back to just a blank chart. We want to be able to just, as you can see, what's going on through here. And what we want to do is we want to bring up the last, say, 3, possibly even, say, 6 months of data, because that's the most important thing to us is what's been going on right now when we're looking for entries. We can apply some other techniques to that, such as looking at the weekly charts and so on and so forth. But right now, I'm just going to really help you guys hone in on the sort of the first steps that I go through, which is just looking at the current market to get a gauge who's in control, where's the trend, and so on and so forth. So we have volume down the bottom here. I wouldn't worry about that too much. The most important thing is just the data here. And the first thing I would say is bring up, say, 3 months worth of data. That's going to give you a really good sort of view of what's been happening for the last 3 months. And when I'm looking at this chart, there's sort of a couple of references points that I can see. Firstly, I can see we've been in a very nice upward trend here in Apple, right? We've been up and down, up and down, up and down, had a little pullback, and now we had a bit of a gap up, and now we're running back up through here. So what I like to do is when I'm trying to find where are the levels of support, level of resistance, I try to start to apply some sort of levels through here. So if I go back to this last point down here for the last 3 months, and what I like to do also, guys, is I like to create a bit of a space. So I can see that we have a bit of a space up the top here and a bit of a space down the bottom. You can see where I've got my line here and my line here. That just gives me a little bit of room. So what I'm going to do is I would say I'll start with this last reference point, and then I'm going to try and connect. I can see how that there's these lows through here, and there's also a significant low through here. So that'll be the references point. I'm trying to see which one is the most relevant in the markets. I don't want too many trend lines. So the first one I'm going to draw is probably something going on through there. That would be the first trend line I would want to draw. Now, why would I draw that? So you can see why this is the first trend line I would draw. You can see how it starts at this bottom, but see how it's actually collected it all through there, collected it through this point through here, almost through that level through there. But you can see what happened. It broke down, resistance, and now broke back up, and now we're running back to the upside. So that'll be the first trend line I would use. And if I'm going to create a parallel trend line, I'm going to see if there's also a bit of a channel that's also been forming as of late. So you can see also there was also a bit of a channel that was also forming. So the reason why this is important is because these are significant reference point in the markets, as we can see right now. And if I'm going to extend this to the right. And so right now we can see that we had a little bit of rest, and the market's popped up, and now we're actually getting a little bit of a pullback. So as we get a bit of a pullback down towards this level, we may find a bit of support here. So that's actually a bit of a reference point for me. So what I'm always looking for is I'm looking for really high quality entry signals. And essentially what I'm looking for is, for me personally, is I'm either looking for the market to be in an upward trend, then they go through a bit of a pullback, and then they just give me a nice little breakaway bar, and I'm looking for something like that, or I'm looking for an extended period of sideways movement and then a breakaway bar. Now I apply some other analysis, and I need to go through my checklist. So I'm not telling you to place a trade based on this, guys. Make sure you do your analysis. But I need to see a few things. Firstly, I want to see that I'm actually trading with the trend. So this is what I'm doing here. Firstly, I'm looking at the 3 months for the view. And I also look at the weekly charts. I also look at, say, 1 year worth of view as well too. There's other steps that I do for my trading system. But to give you a bit of guidance is that this is what I'm looking for. I'm looking for the trade with the trend. And then what I'm also doing is I'm trying to find some form of a pullback, and then the market start to have a bit of a breakaway bar where it opens low, closes high, or we may go through a bit of a run, then a bit of a sideways period, and then we start to break out and we start to likely go for another run again. So again, I'm not gonna walk you through step by step of the entries and exits and all that sort of stuff. You can find a really simple trading system on YouTube, or if you go to johnsfreegift.com, you'll be able to get the free trading course. And in that trading course, I actually walk you through 3 powerful systems, and a very, very simple system I'm talking about right now. So those trend lines here would be the only trend lines that I need to apply. So right now, if I'm looking at maybe trading Apple that is, guys, okay, over the last few videos I've done in the last couple of days, I've talked about my big picture sort of stuff, where I'm just looking to buy and hold for a couple of years. I have sort of a 2-year view. This here is more of a short-term view. This is sometimes I'm in and out within a couple of days, and then I have sort of a trading system that gives me sometimes in and out within, say, a few months. Just depends on what the market does. So right now I can see there's actually nothing here at all. Remember, I'm trading with the trend, but I need to see some form of a pullback first, and then see if I can re-enter there. So let's actually start to go through some other different stocks. Let's actually apply the exact same analysis to Amazon. So I'm going to erase all the trends off the screen. And as you can see, once again, what do we have here? Firstly, what do we have? We have 3 months worth of data, just black bars, because it's not the individual candlestick or the individual bar I'm looking at. I'm trying to identify the highs, the lows, the trend analysis, and what may or may not be coming down the future. So once again, I'm now going to apply my analysis to the Amazon charts. So what do I see? I can see that we have a few references points. We can see we have this is the ultimate low. Then we have this a bit of a low point. So this will be the low point. I can see from this point here, we started to make a higher low, higher low, higher low, sort of a double bottom through here. And we've been going sideways, not much going on through here when it comes to Amazon. So what I would say, okay, I can see there's a bit of references points where I could probably draw my trend line. Again, guys, you don't want too many trend lines on your screen. And once again, I want to references. Notice how clean my chart is. There's not grid lines. There's not the code or the symbol in the background. There's not stochastics and all that sort of stuff. The most important thing is the chart where support, resistance, trend analysis here. So all I'm going to do is because this is the lowest point before we started an upward trend, I'm just going to draw a trend line through here, and I'm just going to start to extend that up as much as possible. And I'm probably going to draw it through there somewhere, possibly even a bit lower. In fact, I'm going to start it from this low point. So as you can see, I'm going to start it with this low point because this will be the major low point. And all I'm doing when I'm drawing my trend lines, I'm trying to see whether the market actually bounces off that level. Not because I want it there, but because the market respects it. And so if I bring my trend line up through to here on Amazon, you can see, what do we have? We have a low point, we have another low point, and we have a pullback, came down, support. We also have another low point through here. So as we can see that what I was saying before about the way that I trade is, you can see how that when we have a bit of a pullback, the market goes for a run. So I'm always trying to trade, and here, as you can see, I'm always trying to trade. So when we have a run up, we get a bit of a pullback, I'm trying to get a nice little trade here. Or we may have a sideways period, there's a nice little breakaway bar, as I said before, and then away it goes. Now we're going into a bit of a trading range, a bit of a trading channel. And I also can see that there's probably a bit of a significant level of resistance going on through here, around about that level through there, which is that 3,250 level. And you can see how it's squeezing up into a bit of a triangle pattern now. So as you can see, it hasn't been really doing much for the last, what is that? Just looking at my little Dubilucky thing over here. It's about 28 days. It was about 20 trading. It's about 20 trading days for about a month. Hasn't been really doing much. So what Amazon could be doing, and I'm not saying this is a trade setup, guys. I need to go through all my checklists, and I need to go through my 3 month, I need to go through my 12 month, and I need to look at my weekly charts to make sure that everything lines up. But as you can see, not much is going on through here. So if I start to, as I said before, I'm looking for either a pullback and then a breakaway bar, or I'm looking for a sideways and then a nice breakaway bar. So if Amazon gives me a nice little bullish up bar, which means it's a higher low and a higher high compared to this bar over here. It opens in the bottom sort of 1/3 and closes in the top 1/3, and we get a very nice increase in volume. There's a very high probability over the next 2 to 5 days we're going to see something like that with Amazon, and that'll be nice sort of what we call a short-term trade. And roughly about a 70% success rate overall with something like that. Again, it's not definite, because if I look at my 12-month view, there could be a lot of things that I look for with that. So I'm not telling you that is a trade, guys. I'm just giving you some examples of looking at what I look for and what the market's doing. So as you can see, we can get some really nice little entry signals based on the chart itself, which is the most important thing. And moving averages and stochastics and RSIs and all that sort of stuff can help, but most of the time, in fact, 100% of the, probably 99% of the time, the best thing to do is, as you can see, what is the stock doing? Because that's the most important thing. It's not the stochastic being oversold or that sort of thing. So let's actually continue on here. Let's actually go to Tesla. Let's actually bring up Tesla. Let me actually bring up, once again, I'm going to bring up how long? I'm going to bring up the good old 3 months worth of view. And I can see we had a bit of a low point down here, and I can see we've been trending up and we've just been going sideways. So once again, I'm trying to identify where the market is going. Where we are right now. We're definitely in an upward trend. We definitely haven't been doing much now for, how long is that? Look at this here, nice little up move. You can see that we actually been going sideways once again for about 20 days. So I can see, once again, if I draw my trend line from this absolute low point down the bottom here, and if I draw this up through to there, I can definitely see that would be a trend line that I would want to use. And the reason why I would want to use something like that is, you can see it starts from this bottom, and then we start to create a little bit of a low. We start to create this little bit of a higher low, and now you can see we started to definitely start to see a very nice sort of movement to the upside, as you can see all through here, moving up, moving up, moving up, moving up. Once we actually broke this trend line, we started going sideways. So I wouldn't use that trend line there. And so what I'm going to do is I can also see that it could quite possibly be a bit of a channel going on through here. So once again, I'm not going to assume it. I'm just going to see if the market does. And sometimes the market won't. But if I create a little bit of a trend line and I bring this to the tops of this through there, I can definitely see that, look at this. So we have this resistance point back here. We have this resistance point back through here. So if I extend this to, let me just delete that off the screen. So if I extend this to the right, as I'm looking out with Tesla, is I can see Tesla right now has actually been going slightly down, getting very, very, very close to this other trend line, which could cause a bit of a support level. And I also can see that there's probably a bit of a drop to the downside. You can see all here, not much going on when it comes to Tesla. So I also can see that we have this reference point to the high side here, and this latest high through there. So I want to see, is there something like a bit of a trend line I can draw down through there? And so this would be the trend line I would want to use for the downside. Now, why would that be important for me? Because if I'm looking for a nice sort of short-term trade out of Tesla, and this continues to do this, where we continue to do this and this, you can see how we're squeezing up into a bit of a potential sort of squeezing up. If we get that, and then suddenly we start to get something like that, where it's breaking up, and we get a nice little low volume, and especially a nice little increase in volume, we get that. There's a very high probability we're likely to see something like that in a 2 to 5 day period, and probably even run back up towards our highs up here somewhere. There is a little bit of resistance up here around that 650, but this is just, again, guys, not to tell you to trade that, but just to give you some guidance on, once again, here are some simple things, guys. You can just see what happens through here when it comes to, these markets and so on and so forth. Once again, guys, if I just take everything off the screen through here, once again, I'm looking for periods of what? When the market pulls back, and I'm looking for a nice little breakaway bar through here, or the market's going sideways, and then I'm looking for a nice little breakaway bar. It doesn't work all the time. You can see we had a little bit of sideways period through here, nice little breakaway bar, didn't do much for a few days, and then ran up. Had a nice little sideways period through here. Look at this here, nice little breakaway bar, and look at this here, 1, 2, 3, 4. 2 to 5 days later, made a nice move. You see what I'm saying through there, guys? And again, I'm just going through the charts, but it's a very, 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 very powerful system when you're looking at a short-term trade. Again, you're in and out 2 to 5 days. So if you did trade this one here, say you're using options, trading in the money options, 1, 2, maybe even 3 days later, you would have had maybe a 10 to 15, maybe 15, maybe 25, 20, maybe 15 to 20% loss trading in the money options because nothing really happened in that bar. Okay, there's a losing trade there. Move on. Okay, here's another entry signal, sideways. We've got a nice little upward trend going through here. It's been going sideways, nice little breakaway bar. 1, 2, 3 bars later, and that probably would have given you maybe 100%, maybe more profits. So in two trades, one gave you a minus 20%, and the next one gave you probably the next one gave you 100% return, maybe even more. But 100% return, you're still left with 80% return. If you're trading 10 grand per trade. Over a 2-month period, Tesla gave you 2 trades, and so therefore it generated around $8,000, not including brokerage. And that's the way that I like to look at it. Again, these are short-term trades, guys. Short-term trades, okay? So, and as you can see, just by applying this analysis all through here, and you can see that once we start to apply these, okay, sideways movement, little break up, and then we have another sideways movement, and then another little break up. All right, through there. And it's interesting that this entry signal, as I was saying before, the little breakaway bar. Remember I was saying before about the volume? Well, let me just do this here. Let me bring this volume up. This little breakaway bar, notice how this breakaway bar through there, if I bring up my cursor, notice the volume that day. This is the volume. See, this is the volume this day here, down here. So if I bring up my little Dubalaki thing through here, you can see this was the volume. Remember I said before, a volume increase is really, really good. This is what we're looking for in a volume increase. You can see there was actually a volume increase this day here. And then you can see as we started to move up, nice little sideways period, nice little up bar, nice little volume increase, and then away it goes. So you can see what happens when we get these nice sideways, when we actually start to get an upward trend, nice little sideways period through here, as you can see, and then we get a nice little breakaway bar, and then once again, and then away it goes. So there's obviously a lot of different stocks out there that I could analyze, guys. Let me just analyze just one more. Let's actually go to Facebook here. Okay, so let's go to Facebook and let's see what Facebook's doing. Again, for the last 3 months here. Again, guys, I'm going to repeat myself that when I'm looking for a setup, I look at the sort of the close-up view, and then I'll go to the 12-month view on the daily charts, and then I'll look at the weekly charts. Because sometimes you might get a nice little breakaway bar, but that's right at major resistance levels. And that's going to stop you. That's going to probably a bit of a lesser probability on that trade than if it would if there was no resistance there. So what we're seeing through here, we can see that we're actually in a bit of a sideways period, aren't we? They've got a bit of a gap here and a bit of a run to the upside. This is an earnings gap. So if I'm trying to identify my channels or support or resistance levels or anything like that, this is the last low point through here. So let me see if I can identify some. You know what? I'd probably, if I can draw the trend line down through there, I would probably use that as the trend line. So this would be the trend line through there. Now, why would I use this as the trend line and not something like this? So if I start from the bottom again, remember we start from the lowest low at the last 3 months, and then I'm looking to continue this up. Why would I use this one here as my level that I'll be looking at and not this one here? Well, the reason why I wouldn't use it is simply because the market gives me more touches and more bounces. You can see this is only one reference point, meaning the start, and then one bounce. So that's not relevant to where we are right now. It may be in the future where I have to start to change my trend lines. But right now, we can see that we actually had a lot of references point. We had the market came down, found support, and actually broke back above. We can see we found support on this day. And you see how it's all collected it all through these points, all through here as well. So that'll be the first sort of reference point that I can see that's going on through there. Once again, if I'm trying to see, is there any bit of a channel going on here? Let me see if I can identify some sort of a channel going on through here. And wow, I didn't actually expect that. So as you can see, if I'm bringing up that's actually the major high point up there. Okay, why would I use, say, something like this point through here compared to using the ultimate high point up through here? Why would I use this one here as the channel? As you can see, it was in a bit of a channel compared to this one. Well, as we can see, that by identifying this high point up through here, it's only one point, and now we're referencing in here. But moving on, we can see we had all these references point through here, this point through here, this point, and all through these levels, right through there. You can see how it's actually respected those levels. And you can see we're actually starting to slow, higher low through here. And that's obviously other techniques you can use by reading the markets. But by identifying this, that's the reason why I wouldn't want to use this top line through there. We can see we've actually broken out just now. We've just nicely broken out of this level. And now we're just breaking up right now when it comes to Facebook. So once again, guys, this is how I look at the markets and look at the markets all the time. And I'm just trying to find, is there a short-term play? Is there maybe like a long-term play? A short-term trade, I'm in and out of it for say 2 to 5 days. More of a long-term play, like I'm actually in a few long-term trades right now. I could be in those trades for a month or two. So depending on the type of trades that I do, that's the way that I do it. Plus also, if you've been watching my last few videos, then you would know that I also have investing type of trades where I'm looking to buy and hold for many years to come. And to do that, I'm looking at those major long-term, big long-term weekly charts to see what's going on through there. So I hope this helps you out, guys, when identifying and understanding how to read the markets and just simplifying the markets in itself. And maybe some very simple sort of entry signals that you can go back and back test it. You know, don't use my word for it. Go back and back test it. It doesn't make a profit every single trade, but around 70% of the time, within 2 to 5 days of what I talked about today, within 2 to 5 days, around 70% will run on for a nice profit. Sometimes they won't. You saw with Tesla, right? Tesla first trade made a loss. Okay, cool. 2 to 5 days, we're out. And then the second trade, that actually made up more for it. So keep your trading really, as you can see, guys, that the more simple your trading get, the better it's going to be for you. I just gave you a very, very simple system. You can see just by applying that, there was 2 trades over the last couple of months when it come to Tesla, and you would have made some nice profits on that overall with having good risk management and so on and so forth. So, all right, guys, that's it for me. I hope you enjoyed this whole video. It's something a bit different for you guys when it comes to the news announcements, a bit of motivational stuff, and obviously if you're watching it right now, you made it all the way through this video. So a big double thumbs up for you when it comes to that. If you like this, guys, make sure you share this out. Make sure you hit the subscribe button. And once again, if you like to learn more about trading systems and stuff like that, then just grab that free trading course. I know you're going to absolutely love it. And then go to johnsfreegift.com. And I will speak to you guys real soon.